This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Resource-scarce Japan is shoring up long-term supplies of liquefied natural gas from close allies Australia and the United States as key contracts from providers including Russia are set to expire by the early 2030s. Japan's biggest power generator JERA last month agreed to buy a 15.1% stake in Woodside Energy's Scarborough project in Australia. It was the latest in a string of deals as the fallout from Russia's invasion of Ukraine threatens to disrupt access to gas from its northern neighbor, making it more imperative to find reliable long-term supply sources. LNG accounts for about a third of Japan's power generation and it is the world's second-largest importer behind China.
Oil prices extended last week's losses on Monday on concern about slow demand in China, although lingering geopolitical risks surrounding the Middle East and Russia limited the decline. Brent futures fell 55 cents, or 0.7%, to $81.53 a barrel at 04:05 GMT, while U.S. West Texas Intermediate, WTI, dropped 57 cents, or 0.7%, to $77.44. Both benchmarks fell last week, with Brent down 1.8% and WTI 2.5% lower on bearish Chinese data which pointed at softer demand in world's #1 crude importer.
Moving on to the top news in the energy sector.
China's top coal-producing province of Shanxi intends to stabilize output of the fossil fuel this year with officials skipping production targets, after energy security concerns saw targets rise in the previous 2 years. The province accounted for nearly a third of production last year when overall national output hit a record high. Shanxi Vice Governor Wu Wei told a provincial delegation at China's annual parliamentary meeting that the province would make every effort to stabilize coal production and supply. Shanxi delegate Zhang Linshan told reporters on the sidelines of last week's provincial meeting that deliberations differed from last year, when the province announced an increase of 60 million metric tons for the year.
Saudi Aramco, the world's top crude exporter, plans to reduce Arab heavy crude supply to term customers in Asia in April due to oilfield maintenance, two sources with knowledge of the matter said on Monday. The producer will maintain April loading for other crude grades, one of the sources said. The reduction comes after the OPEC Plus decided early this month to extend voluntary oil output cuts of 2.2 million barrels per day into the second quarter. Saudi Aramco notified Asian customers of their April crude allocations, days after releasing the official selling prices for the same month. Next, we have the top news in metal markets. Ukraine produced 1.08 million metric tons of steel in the first 2 months of 2024, and 52% jump from the same period in 2023, data released by Ukrainian Steel Producers Union showed on Friday. Ukrainian steel production fell following Russia's invasion on February 24, 2022, and the destruction of leading steel plants in fighting since then. Ukraine was a major steel producer and exporter before the invasion. In 2022, steel output decreased by 70.7% to 6.3 million tons. Ukraine produced 6 million tons of steel in 2023.
China's lithium industry would benefit from a stabilization of prices of the battery metal, which is set for a long-term uptrend, said the chairman of Ganfeng Lithium, a major Chinese supplier of the battery metal. Lithium demand from producers of power batteries, energy storage and others will keep growing amid an irreversible trend of global energy transition, Ganfeng Lithium chairman Li Liangbin told Reuters on Friday. China's lithium prices have plunged over the past year on surging supplies and slowing demand. Spot lithium carbonate prices in the world's top electric vehicle market are hovering around 100,000 yuan, $14,000 per ton, about 1/6 their November 2022 peak.
We will now look at the top news in the agricultural sector.
Malaysia's palm oil stocks at the end of February dwindled to their lowest levels in 7 months as production hit a 10-month low, offsetting the slowdown in exports, the industry regulator said on Monday. The reduction in stocks in Malaysia, the world's second-largest palm oil producer after Indonesia, would help in supporting benchmark futures, which lost 10% in 2023. Malaysia's palm oil stocks at the end of February fell 5% from the previous month to 1.92 million metric tons, their lowest since July 2023, data from industry regulator the Malaysian Palm Oil Board showed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.